It's amazing to think about, how interconnected the global economy really is these days. It's like this massive, intricate web with businesses constantly doing deals and making transactions across borders.
It really is.
And it's fascinating. Underpinning all of that, making all those international deals actually happen, are these B2B cross-border payments. It's a huge opportunity, right?
Absolutely massive.
But then you start digging a little deeper, and you quickly realize there's this whole set of really unique headaches involved in moving money between companies in different countries. It's not quite as straightforward as it might seem at first glance.
Yeah, you're absolutely right. On the surface, sending money internationally might seem like a pretty simple concept.
Right.
But once you start to factor in the sheer diversity of legal and financial systems that exist around the world, not to mention the geographical distances involved, things can get pretty knotty pretty quickly. So for this deep dive, we've carefully gone through all of our source material to pinpoint what we consider to be the top 7 challenges in B2B cross-border payments. We really want to give everyone listening a clear picture of what businesses are grappling with in this space. Think of this as your fast track to understanding a really critical piece of the global commerce puzzle.
Exactly. We don't want to overwhelm you with technical jargon or get bogged down in minutia. It's more about highlighting what's truly important.
Yes.
We've been looking at this really interesting article that really unpacks these specific hurdles in detail and even hints at how some players like hubfx are trying to smooth out some of those wrinkles. And that's really what we want to do here. Take that complexity and make it digestible, give you some solid takeaways that you can actually use in your own business. We're not just interested in what these challenges are, but also the why behind them and what are some of the ways that businesses can navigate them effectively. Okay, let's jump right in.
Let's do it.
First up is something that's often been called the regulatory maze.
Ah, yes, the regulatory maze. This is a big one. What's really fascinating here is just the sheer number of layers of rules and regulations that businesses have to untangle when they're dealing with cross-border payments. You have to remember that historically, each nation has kind of developed its own unique approach to financial security and oversight.
Right.
And that's led to this very complex patchwork of regulations that businesses need to navigate.
Yeah. It's almost like every country is speaking a slightly different language when it comes to finance.
Exactly. And that can make things very tricky for businesses trying to operate across those borders.
Oh, wow.
We're talking about anti-money laundering rules, AML, which are designed to prevent illegally obtained money from being disguised as legitimate funds.
Right. Essential, obviously.
Right, absolutely.
Yeah.
And then you've got Know Your Customer Protocols, KYC, which require businesses to really thoroughly verify the identity of their clients.
Okay.
Then you've got sanctions lists to contend with, which are constantly being updated. And on top of all of that, each country has its own specific tax regulations.
So it's not just about knowing the rules, it's about keeping up with them as well.
Exactly. And the challenge isn't just the sheer number of these regulations, but also the fact that their interpretations and how strictly they are enforced can vary quite a bit from one jurisdiction to the next.
Yeah. So much nuance to keep track of.
It really is.
Okay, so let's try and make this a little bit more concrete. Picture this. You've got a fashion company in Italy that's sourcing textiles from a supplier in Brazil.
Okay.
They're not just responsible for understanding and adhering to Italian and EU regulations, they also have to be completely up to speed on Brazil's specific financial laws as well.
It can be a lot to handle.
It's almost like trying to play a board game where each country has its own completely different rulebook.
And sometimes those rulebooks even contradict each other.
Exactly. And you can't just plead ignorance if you make a mistake. The consequences are serious.
Very serious. We're talking about potentially severe penalties, really hefty fines, and in the worst case scenario, having your business operations completely shut down.
So compliance isn't just a bureaucratic hoop to jump through. It's fundamental to operating internationally.
Absolutely. If you want to play in the global arena, you have to play by the rules of the game, and those rules can be complex and ever-changing.
So what's the best way for businesses to navigate this dense regulatory fog? Our source material really highlights the value of partnering with specialized payment service providers like hubfx.
Yeah, those partnerships can be invaluable.
They're presented as having this really in-depth, specialized knowledge of international regulations, which makes sense, right? That's their bread and butter.
Exactly. Their core competency really does lie in understanding the often very subtle nuances of compliance in different parts of the world. They can provide crucial guidance to businesses on the specific documentation needed for various types of transactions, making sure everything aligns perfectly with local legal requirements.
That takes a huge weight off the shoulders of those businesses, right?
Definitely.
Okay, so they're staying on top of it so their clients don't have to.
Exactly. It really lifts a significant burden off businesses, allowing them to focus more on what they do best, their core activities.
Okay, let's move on to challenge number 2. And this is a big one that can definitely cause sleepless nights for finance teams. Currency volatility.
Ah, yes. The dreaded currency fluctuations.
This is where the inherent unpredictability of exchange rates can really have a tangible, sometimes a very painful impact on a company's bottom line.
You're right. The value of one currency relative to another is in constant flux. And that flux is driven by a whole host of interconnected economic and political factors. It's a very complex interplay.
Right.
We'd be talking about changes in interest rates, government policies, even major global events that can send ripples through currency markets.
Okay, so to illustrate just how much of an impact this can have, let's go back to that US-based software company we mentioned earlier that has that long-term contract with a client in India. Imagine that contract is priced in Indian rupees. They've carefully projected their revenue in US dollars based on the current exchange rate.
Okay.
But if the rupee suddenly weakens significantly against the dollar over the course of that contract, when they convert those rupee payments back into dollars, they're going to end up with considerably less revenue than they originally planned for.
It's a nightmare scenario for any business.
It's like your carefully calculated financial projections suddenly have this giant question mark hanging over them.
It makes planning incredibly difficult.
We actually heard a story about a small business that almost went under because a major currency swing happened right after they signed a large international contract. They simply hadn't factored that risk into their calculations. It really underscores how unpredictable this can be.
You're absolutely right. And it's not just about the potential for reduced profits. The unpredictable nature of currency fluctuations can also make accurate financial planning incredibly difficult, which can have knock-on effects across the entire business.
Businesses need a certain level of predictability when it comes to their costs and their revenues to make informed decisions about investments and future growth, right?
Absolutely. Without that predictability, it's like trying to navigate in the dark. So the question becomes, how do businesses try to protect themselves against this kind of financial roller coaster?
And thankfully, there are ways to mitigate this risk. Our article highlights FX spot and forward conversion services as potential solutions, specifically mentioning forward contracts offered by companies like hubfx.
Yes.
For anyone who isn't quite familiar with these terms, can you break down what those actually are?
Certainly. When we talk about spot exchange, we're essentially talking about an agreement to exchange currencies right now, at this very moment, at the current market rate. A forward contract, on the other hand, is a bit more complex. It allows a business to lock in an exchange rate for a specific amount of currency at a predetermined future date. So going back to our US-India software company example, the US company could enter into a forward contract to exchange a specific amount of rupees for a specific amount of dollars at an agreed-upon rate, let's say 3 months down the line.
Regardless of what the actual market rate is at that time.
Exactly. This essentially eliminates the risk of those currency fluctuations during that 3-month period, providing a really crucial element of financial stability and predictability. It's a bit like taking out an insurance policy against unexpected currency swings.
It's like setting your price in stone no matter what the market does.
Exactly.
Okay, that makes a lot of sense. All right, moving on to challenge number 3. Those often surprisingly high transaction costs that can come with cross-border payments. This is something that can really catch businesses off guard.
Yeah. It's easy to overlook those costs when you're initially focused on the bigger picture of an international deal.
What's really interesting here is the sheer number of intermediaries that a cross-border payment can potentially pass through on its journey. You've got the originating bank, then often one or more correspondent banks in intermediary countries that are helping to facilitate that transfer.
Right.
Then, of course, you have the receiving bank on the other end, and sometimes even payment processors involved in the background. And each of these entities typically levies its own set of fees for its services.
It's like a toll booth at every stage of the journey.
Exactly. And all of those little fees can really accumulate.
They can.
Our source material emphasizes how these costs can be especially burdensome for small and medium-sized enterprises.
SMEs, yes.
These businesses are often operating with much tighter profit margins.
For them, it can make or break a deal.
Think about, for example, a small craft brewery in Ireland selling its unique beers to distributors in Canada. The various fees associated with processing those international payments could take a substantial chunk out of their earnings, making it harder for them to compete with larger companies that have more financial wiggle room.
Absolutely. For smaller businesses that often operate with leaner margins, these seemingly small individual fees can collectively have a very significant impact on their overall profitability and their ability to effectively compete in the international marketplace.
Okay, so how do businesses try to tackle these high costs? Is there a way to make these payments more affordable?
There are strategies that can help. hubfx, aiming to streamline the payment process itself, potentially cutting out some of those middlemen along the way.
So less toll booths.
Exactly. By optimizing their payment infrastructure and potentially establishing more direct relationships with banking partners in different regions, they can reduce the number of intermediaries involved in each transaction, and that can make a big difference in terms of cost.
Makes sense. Fewer hands in the pot, less money gets siphoned off.
They also highlight their commitment to offering competitive exchange rates and providing multi-currency bank accounts, which can minimize the need for multiple currency conversions and the associated conversion fees. The goal is to create a more direct, efficient, and ultimately more cost-effective pathway for international payments.
Streamlining, simplifying, cutting out unnecessary steps.
Precisely.
Next up, we've got challenge number 4, and this is one that many of us can probably relate to on a personal level. Those often frustrating delays that can occur in payment processing.
Oh yes, we've all been there.
And we're so accustomed to near instantaneous transactions when we're dealing with our banks within our own countries.
Right.
So the lag associated with international payments can feel really jarring, like where is my money?
It's true. Domestic payment systems often operate on very well-established and highly standardized networks.
Okay.
Cross-border payments, however, often involve a much more complex and much less standardized web of systems, with different countries having their own unique processes and timelines.
It's that lack of standardization that really causes the headaches.
Exactly. That a payment being sent from a business in Argentina to a supplier in Egypt might get routed through several other countries along the way, with each stop adding its own processing time and potential for delays.
So the money's not taking a direct flight, it's hopping on a series of connecting flights.
A very apt analogy.
And it's not just an inconvenience.
No.
Those delays can have very real-world repercussions. Think about the recipient company experiencing disruptions to their cash flow, potential delays in fulfilling their own orders if a key supplier hasn't been paid promptly.
Right.
And it can even strain relationships with those international business partners. Nobody wants to be in a constant state of chasing after overdue payments.
It creates a lot of unnecessary friction.
Absolutely. So how can technology step in to try and speed things up a bit?
hubfx's focus on really innovative systems and their ability to potentially bypass some of those intermediary steps and leverage real-time data to make things move faster.
So it's about finding those efficiencies within the existing system.
The key here is really optimizing the entire payment workflow. By utilizing modern technological solutions and potentially establishing more direct payment corridors, these advanced systems can circumvent some of the traditional bottlenecks that cause those frustrating delays. The use of real-time data allows for much quicker verification of transactions and faster processing times, ultimately leading to quicker settlement of funds and improved cash flow for businesses on both ends of the transaction.
Everyone wins when the system is more efficient.
Precisely.
Challenge number 5 brings us to a really critical area in today's digital world: security concerns.
Yes, this is an absolutely paramount concern.
When you're dealing with financial transactions that cross international boundaries, the stakes for security are incredibly high.
Couldn't agree more. The very nature of digital cross-border payments makes them very attractive targets for cybercriminals who are constantly looking for vulnerabilities to exploit in order to steal sensitive financial data or execute fraudulent transactions.
It's a constant cat and mouse game.
It really is. And this challenge is further complicated by the fact that security regulations and the level of enforcement can vary significantly from one country to another.
So it's like trying to secure a house with different types of locks on every door and window.
A very good analogy.
Any kind of security breach can have devastating consequences.
You're right. It's not just about financial losses. It's also about reputational damage and loss of customer trust.
Absolutely. Trust is everything in business, especially when you're dealing with something as sensitive as finance.
Couldn't agree more. Building and maintaining that trust and ensuring the absolute integrity of financial transactions is absolutely paramount in the world of international business. Any perceived weakness in security can very quickly erode that hard-earned confidence and seriously hinder future collaborations and growth.
Okay, so what specific types of security measures are we talking about in this context?
Well, first, hubfx utilizes modern software development tools with a very strong focus on security right from the start. Second, they keep client funds in segregated accounts within highly reputable Tier 1 banks. These are essentially the most financially sound and trustworthy banks globally.
Okay.
And finally, they implement really robust security measures like encryption and multi-factor authentication.
Can you elaborate on those last 2 points? Why are those so important?
Sure. Encryption essentially scrambles data to make it completely unreadable to any unauthorized individuals or systems that might try to intercept it. It's like putting your financial data in a lockbox that only you have the key to open.
I like that analogy.
And then, multi-factor authentication requires users to provide multiple forms of verification before they can access their accounts. This adds an extra layer of security by making it much more difficult for unauthorized individuals to gain access, even if they manage to obtain one of those verification factors.
So it's all about layers of protection.
Exactly. Think of it as a defense in depth strategy. By combining multiple security measures, you create a much more robust and resilient system that's much better equipped to withstand attacks and safeguard sensitive information.
Moving on to challenge number 6, which might sound a little bit behind the scenes, but is actually crucial for keeping those international operations running smoothly.
Yes, this is an often overlooked but really important aspect.
This is the challenge of complex reconciliation and tracking.
This is where the often very complicated back-office complexities of cross-border payments can really become apparent. When you're dealing with payments made in different currencies that have different processing times and potentially come with inconsistencies in invoice formats and supporting documentation from various countries, it can become a real administrative burden to accurately match those payments with the corresponding invoices and effectively reconcile your accounts.
Yeah, I can imagine that can get messy really quickly.
It definitely can.
That example of the German company struggling to reconcile a payment they received from a U.S. client simply because the invoice formats were different and the processing times didn't align perfectly is a perfect illustration of this. It might sound like a relatively minor annoyance.
It does.
But when you're dealing with a high volume of international transactions on a regular basis, these kinds of discrepancies can quickly lead to significant administrative overhead, increased potential for errors, and a lot of wasted time trying to sort everything out.
Absolutely. You end up with staff spending hours chasing down paperwork and trying to make sense of mismatched data.
So inefficient reconciliation processes can not only tie up valuable personnel resources, they can also lead to delays in identifying and resolving any payment discrepancies and even impact the accuracy of your overall financial reporting.
Right.
It's a seemingly mundane task, but it can have surprisingly significant financial and operational implications for a business if it's not handled efficiently. So how can businesses streamline this often laborious process? hubfx offering specific tools and services designed for simplified reconciliation.
Right. They're trying to take the pain out of this process.
Including real-time payment tracking capabilities and assistance with standardizing documentation.
What's really valuable here is the automation and standardization that these types of tools can bring to the reconciliation process. Real-time payment tracking gives businesses much greater visibility into the current status of their international transactions. And by helping to standardize the format and content of payment-related documentation, these platforms can make it significantly easier to automatically match incoming payments with the correct invoices and other relevant records.
So less manual work, less room for human error.
Exactly. And that can drastically reduce the manual effort and potential for errors that are typically involved in reconciliation.
Okay, let's talk about our final challenge, challenge number 7. This one really highlights an important point, especially when we're talking about enabling truly global commerce for everyone.
I doubt.
This is the challenge of limited access to essential financial services in certain regions of the world.
This is a significant barrier, particularly in emerging markets and more remote geographical areas where the traditional banking infrastructure might not be as well developed or as easily accessible as it is in more established economies.
Right.
As our source material points out, a small business operating in a rural area of sub-Saharan Africa, for example, might face considerable difficulties in finding a local bank that is properly equipped to efficiently handle cross-border payments.
It's almost like certain parts of the world are being left behind in the digital economy.
In many ways, they are.
And this lack of access can really stifle economic growth in those regions and severely limit the opportunities for businesses there to fully participate in the global marketplace.
It's a real catch-22.
Yeah.
They need access to global markets to grow their businesses, but they often lack the necessary financial infrastructure to participate effectively.
If you can't reliably and easily send and receive international payments, you're at a massive disadvantage compared to businesses in areas with more robust financial infrastructure.
Exactly. It effectively creates a significant barrier to entry for businesses in these areas, limiting their ability to engage in international trade, which in turn can hinder overall economic development and the growth of global interconnectedness.
So how can companies like hubfx potentially help to bridge this financial access gap? Their global reach and their ability to facilitate the use of alternative payment methods that are more common in those regions with less developed traditional banking systems. Things like mobile money and digital wallets.
Yes, and that's really where innovation in financial technology can play a truly transformative role.
Mhm.
By offering alternative payment solutions that are more readily available and widely used in those regions, like mobile money platforms and digital wallets, these platforms can provide a vital and much-needed link to the global financial system for businesses that might otherwise be excluded.
Right, so it's about meeting those businesses where they are, using the tools that are already familiar to them.
Exactly. Additionally, offering multi-currency account options can provide a more convenient and efficient way for businesses in these regions to manage their international transactions without having to rely solely on those potentially underdeveloped local banking systems.
So to sum it all up, we've taken a really deep dive into the 7 major challenges that businesses encounter when dealing with B2B cross-border payments. The complexities of that regulatory maze, the unpredictable nature of currency volatility, often surprisingly high transaction costs, frustrating payment processing delays, significant security concerns, the often overlooked complexities of reconciliation and tracking, and that really crucial issue of limited access to financial services in certain parts of the world. It's a multifaceted and often complex landscape to navigate.
It certainly is. But having a solid understanding of these inherent hurdles is absolutely essential for any business that is currently operating internationally or has plans to expand its reach across borders. Recognizing these specific challenges is really the crucial first step towards being able to navigate them effectively and ensuring smoother and more efficient international trade operations.
And hopefully this deep dive has provided you with a clearer and more comprehensive understanding of those complexities and some of the potential solutions that are emerging to address them. We wanted to give you that quick but thorough knowledge that you were looking for.
That was the goal.
It's clearly not just a simple matter of moving money from one country to another. It involves navigating this whole interconnected ecosystem of regulations, financial risks, and technological considerations.
Absolutely. And as we wrap up, this leads to a really important question for everyone listening to consider. We've talked about these 7 distinct challenges in detail, but now we want to turn it over to you. Considering everything we've discussed, what fundamental shifts do you believe are truly necessary within the global financial infrastructure to genuinely streamline B2B cross-border payments for all businesses, regardless of their size or geographical location? It's definitely worth taking some time to ponder those broader implications and the potential future evolution of international finance.
And on that note, we'll wrap up this deep dive. We hope you found it informative and insightful.
Thanks for listening.